I've never seen myself as just one thing, and I made sure no one else could either. By staying true to myself, making my own path, rising above expectations, and opening the door for others to be their true selves. The first spirit, made with VSOP Cognac, finished in bourbon casks, Martell Blue Swift, soar beyond the expected.
Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am Illuminati, and this is the Crypto and Cognac podcast show, as always, coming to you live every Thursday on YouTube. And as always, fueled by my friends Martell Cognac. Tonight I'm having some Martell VS. For those of you who don't know, who only hear of those other cognac brands, Martell is actually the oldest of the great cognac houses. So I'm going to be having some smooth VS this evening as we have a conversation around all the different analysis. You know, people always want to know about the trading side. Everybody always excited. How do I trade? Is there money in it? And I keep reminding people, listen, trading in any market is very technical. It is something that you should be qualified. It requires a lot of experience, learning, a lot of trial and error before you get it right. So this evening I've decided to bring someone on who this is their expertise. I am by no means a technical person. I mean, in terms of analytics of charts. So I'm bringing one of our old friends, a friend to the podcast, season 1 veteran, Mr. Kiwan Landreth-Smith, to share with you guys as it relates to technicals versus sentiment analysis and fundamentals. We're going to talk a little bit about that. Kiwan, what's up, buddy?
How are you going, Al? Thanks for having me back on. It's been a while.
Thank you for being back. Yeah, I mean, it's been about almost 2 seasons between your last visit.
Yeah, I've been keeping up, and I really been enjoying the podcast that you've been carrying on, man. It's been, it's necessary, needed.
Yeah.
Kudos to you for keeping up that energy and doing the do, man, and representing,
Yeah, I mean, so what I always say is, the education is free, the information is free. So may not always be able to, give people some free bags in terms of coins and currency and stuff like that, but we could always share the information. And that's why, we're talking to you this evening, and we're talking more specifically TA versus SA, and you're gonna get more deeply into the TA side. But I just wanted to, for context, to give people who not familiar with these different sayings, the difference between TA, the difference between SA. So TA is basically technical analysis, right? Yeah. And this approach uses basically historical price and volume data to identify patterns and trends that can be used to predict future prices, right? So technical analysis looks at charts, it looks at indicators, it looks at moving averages, things like support, resistance levels, trading volume to make predictions.
Specifically statistical data.
Right, so statistical data, right? Which is different from sentiment analysis, which looks more overall at the mood and the sentiment of the market and the crypto community. And usually this is done by looking at social media, looking at news, looking at conversations and stuff like that in the space to form an opinion about where the mood of crypto is taking it. So people will say, people will be looking at the fear, greed index and stuff like that, which kind of informs sentiment. And then the third one, which we're not going to focus too much on today, is fundamental analysis, because that looks at the underlying factors that influence the particular crypto asset. So looking at the technology, people will have conversations about whether proof of stake is better than proof of work and stuff like that, whether this blockchain is better than that blockchain, as the case may be. fundamentals, also looks at the team that is building the particular project. It looks at the overall market conditions, and it seeks to kind of figure out the underlying value or the intrinsic value of crypto, even though some people on the outside may argue that crypto doesn't have any intrinsic value. But just like companies, a lot of crypto projects do have intrinsic value. But we're going to start the conversation at the point of your expertise, which is TA, or technical analysis. Shout out to Stephen already in the comments, blowing it up. So, Kiwan, for context, for a little history, I know you've shared this before, but what got you into TA?
Right. So I guess TA was the low-hanging fruit, I suppose.
Mm.
I was seeking out a lot of information online, and what brought me to this world was trying to be more interested in financial instruments and markets.
Right.
And that led me down a path, and I landed on crypto and Bitcoin. And Bitcoin was the perfect kind of meeting point between technology and finance.
Right.
And I'm interested in technology and music, actually, right? So
Yeah.
the technology side of things, and then now this new interest, which is finance. I kind of wanted to figure out, how to master finance, get myself on that path, and get serious about it, because I never did before, and I always thought finance was boring. So, in the content that I was consuming online, YouTube University,
Right.
and I stumbled upon quite a few TA guys, right?
Right.
And the one guy that really I found after watching a lot of his content, I realized that there was consistency and there was underlying method to what he was doing,
Right.
And from 2 or 3 years ago, however long ago it is now, like, and 2019, I think I got into it now. Till now, he's still very
Consistent and methodical.
Yeah, and that's Eric Crown, right? Crown's Crypto Cave.
Yeah.
And he's a crass individual, and he's if someone stumbles into the room and you're looking at his content, they'd be like, what are you doing?
Not safe for work.
Yeah, because he uses colorful language, and he's just really free about just being disgusting at times, but actually a nice person, right?
Right.
From what I could see, and he kind of is a lifestyle thing. It's like every single day he has a podcast, so you get to see the character. But anyway, yeah. So I learned a lot from watching him, actually,
Right.
and then from there, like anytime you look at some of this kind of content, like you'd hear words, and the best way to go about a course of study is to have a notebook and pencil, pen, whatever, and take notes. So words and terms that I didn't understand, I just wrote it down. What is RSI and stochastics and uptrends and downtrends and candlesticks and all these things. He calls it something else, but and yeah,
I mean, this isn't a children's show, so you could use the word. Is it dildos? Is that
the massive green dildo just went through the bung holes of all the bearers, and he's saying it shit like that, right? So that's how I got into TA. So looking at that technical analysis, and it made sense to me, and I was practicing as well. I didn't trade like a fake account. I jumped in with money and lost it all. I lost all the money twice, or maybe even 3 times before I started being profitable.
wow?
But when you lose real money, you learn those lessons, and you learn the lesson, and you could still repeat the mistakes,
Right.
So what you learn when you repeat a mistake is that you have behavior, a habit, predictable behavior. So you could identify your problem that you need to solve.
Right.
My problem was FOMO. Like fear of missing out. When I see the prices
Big-
just
yeah.
growing up, and you're like, shit, I'm missing out on this. And jump in, and then every single time, I think 90% of all the money I've ever lost was because of FOMO.
Right.
Yeah.
But let me ask a question. So a lot of people who may not know you personally or know of you wouldn't know that you're a musician, right? So when you think musicians, people tend to think creative minded, you know, very outside the traditional boundaries of structure. And TA seems to be on the whole other end of the spectrum of thought and processing as it relates to music. How were you able to make that mental transition, or was there even a transition? Was it just something you picked up?
No, so my brain is like that. Like I studied like some engineering and engineering type things, technology focus courses of studying. I did mechanical engineering technology, and what else did I do? Like right now I'm learning coding. So
Right.
so it just intrigues me. It just naturally. When I was in school, I only did what I wanted to do. I was very wayward. So I was in sixth form A levels, and that's where someone had a guitar in school, and I used to steal their guitar during school hours because they had to leave it in the office, right?
Right.
They couldn't bring it to the classroom, so I would sneak out of class, walk into the office, pretending like I'm looking for something, and just walk out and just grab the guitar while I'm on my way out, and then go and hide play guitar all day. And that's what I did for my entire A level tenure. And so, you know, I, but physics was really interesting to me. Biology and the sciences were really interesting. So, and I was good at English and math. So I was naturally good at it.
Right.
Because luckily, I had a good foundation of teachers in primary school and that kind of thing. So, just really lucky to have these mentors in my life. And yeah, it just brought me to this place where I had this. Naturally, I was a really expressive kid. I had a lot of anger to express, and that like, needing to express that anger, that led me to music and surfing. It's so visceral, rock music specifically, and then that rock music led me into reggae and all these types of things, and kaiso and whatever.
Right.
Surfing because I need to express, and then I had a penchant for technical things. So
Right. So as you're saying that, it just kind of coming to my mind that I could see the parallels between that visceral and that exciting experience of surfing and rock music and the crypto space, because sometimes it be like that. It might.
rebel tech.
And even in the violent movements of the market, sometimes it really could give you those rushes, whether it's the market moving positively by 20% over a couple of days, or moving negatively by 20% in a couple hours.
Oh yeah. Have you ever, you haven't been exposed to the crypto market until you felt a vomit in a trade.
I think I think I think last year the move down to, I think, 19K. I think that was that experience for me. Because I got into crypto, like seriously, I got into crypto in a serious way, DeFi summer,
Mm-hmm.
and um, it was pretty much uphill all the way from DeFi summer 2020 until January 2022. It was up. I mean, there was some pullbacks, but they were minor corrections. And being in groups like Omega, you understood those were corrections, and then you go back up. But I think from January to June is where it really hit me like, fuck, this crypto thing is real. Like, I saw my portfolio move from, a certain amount of digits to one digit less to one digit less. Saw aspects of my portfolio move from thousands of dollars to, less than $10.
Yes, brutal.
It really,
So that
yeah.
moment for me was May 19th or May 29th. I can't remember which one. 2021. Yeah.
Mm. You see that like you remember it like yesterday, boy.
Yeah, I remember that. I remember like going down to the point of liquidation, and I was $100 away from liquidation, like like ten. I don't want to say how much. it was it was in the order of
To make you vomit.
yeah.
It was vomit money.
Let's say I had a certain amount of money and it came down to like $500 away from liquidation,
Wow.
and it was turmoil just going on, and that was on Bitcoin. I was doing a trade on Bitcoin, and I laddered a bunch of buy orders down,
Right.
but like I did the calculation wrong. So by the time it shot through all the orders, and then I was way more exposed. I was at least twice as exposed as I wanted to be by the time the last order hit.
Right.
And I was like, oh shit, I fucked up. And then it went right down to 29,000 from 32,000, something like a day or something like that, right? And luckily I had, I had bet the ADA boys. I said, ADA's probably gonna hit $1 or something. But I made a trade. I put a limit order on ADA,
Right.
with a lot of leverage, like months ago. And I said, when this hits, I'm pretty confident that this is going to hit. And this is when ADA was like $3.25.
Right. So that counter trade kind of save your blushes.
Yeah. So so in Bitcoin, I think I lost like over half the account or more. And then I made back the whole thing with the alt trades, especially that ADA trade. And I had a bunch of other limit orders set as well, just waiting at levels of support. And I think all in all, my entire account was down only 30% when all was said and done.
Right.
But it shook me to my core, and I stopped trading for a while.
So, I mean, we're using a few terms that people might need some clarity on. For example, leverage. I think we lost there some video, right? So leverage, meaning using margin, basically borrowing against your crypto to get greater exposure on a trade. You talked about buy orders. Let me ask a question. You talk about leverage, but I feel like through all our conversations and through the different conversations that we have in the group in Omega and stuff like that, it doesn't seem like you're a big leverage trader. Like you're more of a spot trader, or you use small amounts of leverage. Is that correct, or sometimes you're out here winging it, gunslinging it?
So I use high leverage with smaller amounts of money.
Right.
So that I can not have my whole portfolio exposed, but still represent the entire portfolio. So it's kind of like, I might get liquidated on if I have like $200 exposed or something.
Right.
On that $200, if I'm careful, I could bet like to $20,000 at 100x leverage. You know,
Right.
I've done
But
that.
I, I
Yes,
I think I think the only time I've ever had the highest leverage I've ever used was 50x leverage, which for me, I consider that to be gambling. But the only time I was confident enough to use 50x leverage was during the Luna collapse, where shorting Luna was almost
sure.
printing money. It was
Sure.
almost printing money.
Yeah.
But outside of that, how do you even get the balls to do a 100x leverage? Because just to give context for the people listening, um, if you have $1 and your $1 of your own money, and you're investing at 100x leverage, they basically give you $100. So you're trading and earning profits or earning losses as if you have $100.
Yeah.
But what that means now is that if the market moves against you by 1%, you could be liquidated, right?
Yeah. And as if the mark price, there's kind of two
Correct.
prices that that
Yeah.
move. There's the mark price, and then there's the
The,
uh,
the, the, the bid price,
yeah, the order book price, right?
the order book price.
There's the global price, and then there's the order book that the exchange that you're using. There's that price, and that's the
And
price that you liquidated at. And
and
liquidated means that you get, they take
you
your
lose
money.
you
Goes
lose
again.
everything. They take your collateral and
Yeah.
you lose everything. But for those who might be new to the crypto space, not understanding the significant moves that crypto could make on a daily basis, far less, over the span of a couple of days.
Yeah.
A 1% movement is not unheard of by any means.
Yeah, crypto, like on a slow day, crypto moves through a range of like 2%.
Right. So how do you muster the testicular fortitude to go 100x?
Well, it's the quickest way to lose $200. Let me tell you. Yeah. Uh, but if you get it right, then you just printing minting money.
Right.
Sometimes what I would do is I would sit down, I would look at uh, higher time frames. So I would look at the big picture, and in the big picture, you could kind of see. What does that mean?
It might be.
Yeah. In
Yeah.
the in the big in the big picture, you could kind of see areas of value. And 1 second, let me just turn this thing off. Settings, notifications, and off. So when you see price approaching areas of value on the higher term time frames,
Right.
then you could kind of get ready to go in and kind of make a strike. Like say, okay, I'm kind of eyeing this area, uh, and you could, with experience, like every asset pair, they have a kind of behavior. There's a
Right.
personality to it almost. You get to know it. You get to know the ballistics of it, how it moves, and how it has a way it has idiosyncrasies, and
Right.
you get to know it. People trade gold, and I trade Bitcoin. Like I could feel the market, so to speak, because I've been so in touch with it. I've been
Right.
uh, contact with it. I've been there. Like I've watched the charts. I've been too close to it, and I've learned how to be with it in different time frames and from different perspectives.
So
And
as a parallel, that you could probably relate that to your surfing experience, because there would be certain surfing spots that you would, through your experience, would know almost like the back of your hand. You know that high tide is this time of day, low tide is this time, there's a rock somewhere right around here to stay away from. Is that kind of how it feels when you're trading with a pair that you're very familiar with?
Yeah, yeah. So like Bitcoin, it does this bar pattern that you don't really see in other markets so
Right.
much. It goes up, and then it trades in a range, and then it goes down. you know,
Or the
like
inverted bat, which we saw recently
on the weekly, yeah,
on the weekly.
it's like
Right.
massive bar. So yeah, you just get to know it, and there's a lot of parallels with surfing and trading and music.
Right.
And yeah, there's a lot of parallels with the natural order of the world and the way the markets move. Actually, it's just
Right.
to simplify it, like what goes up must come down, kind of thing. You know?
Yeah, the physics of the world is almost like a physics of the market. Nothing goes up in a straight line without coming back down, at some point.
Yeah, I mean, there's books I've read. Can't recall the name of the book now. Um, Mark something, trading for a living, and another one is I can't remember now. But anyway, they basically look at the market charts. The charts are a map of the psychology of the market. You
Right.
know, fear and greed, different measures, and yeah. So back to TA. The TA kind of the charts tell you what you need to know.
Right.
Uh, so I'm gonna bring it back into this TA conversation. All right.
Yeah.
So
So go ahead.
yeah, so you have your fundamental analysis and your sentiment analysis, and you know the different schools of thought. They think that they're the best. You need fundamental analysis, and yeah, guys are like, you need the TA, like that's all you need. The TA tells you everything, and guys
Right.
like TA is like bullshit, like magic numbers,
You just
fun
drawing lines on a you just look drawing lines on a screen.
funds with figures. Like who lives like that? Like the truth is you need to be diligent and aware of all,
Right.
to have your edge,
Yeah,
because you could,
because go ahead, sorry.
yeah, you could be proficient in one thing, but you could be 90% good, but the 10% extra is really where that's the edge,
Right.
so you need to have your edge defined,
Right.
refined, sharpen that edge,
And I think the reason why I wanted to really compare TA versus SA, technical analysis versus sentiment analysis, is that you have two schools of thought. One that says sentiment informs the technicals, right? The technical analysis sees what the sentiment is after the fact. But there's the opposing school of thought that says the technicals and reading the technicals inform the decisions that move the market, that ultimately impact the sentiment of those who aren't following the technicals. So it's like, which comes first, the chicken or the egg?
Yeah. And it's just sometimes it's leading, sometimes is one is
Lagging.
informed, and vice versa.
Right.
So like if you see a really impulsive move on price action, well, you could predict that sentiment is going to change around that.
Yeah.
And I mean, if you know, one thing I've seen and learned, and is amazing how predictable it is how big media, or how big money
Right.
uses big media to manipulate the markets, you know.
Right.
And it's just amazing how they fucking lie. Like they
Straight up.
literally go out and lie, like straight faced lies, and they're like, yeah, this is terrible. Basically saying you should sell now.
Yeah.
And you get to, like, Jamie Dimon, like, idiot today. Like I'm saying like that. He's definitely not an idiot, right? He's a smart guy.
Very intelligent, pretending to not know.
Not know that Bitcoin has 21 million supply in the code. That.
But the thing is, while Jamie Dimon is saying these things publicly, JP Morgan is offering crypto services to their high network customers. So what I tell people to do is, basically stop listening to what these guys are saying and listen to what they're doing. Because while they're telling you, hold off, don't buy this don't make no sense, they and their friends and their high net worth clients are gobbling it up. So if it's good enough for them, why are you listening to him talk, nonsense about it?
Yeah, and that's the thing with sentiment analysis is like you have to put these biases into your brain when you're observing these things and you're consuming that content. It's like okay, Jamie Dimon says that, right? So you do the opposite kind of thing. Yeah. So the sentiment analysis, the best way to curate. The best way to judge sentiment analysis is to curate a good community in your Twitter. We are lucky. We're really lucky actually to have a group like Omega.
Yeah.
I mean, I've been in a few other groups, some groups based in the UK and that kind of thing, and it's like those guys are cutthroat. They're like kind of scamming each other, and they have like little cliques in the group, and Omega.
And even some of these bigger groups, you really, like you said, you see where people trying to undermine each other, and the communication and the relationships aren't as genuine as we see in Omega. I mean, it's kind of crazy that Omega has people like yourself who would share their TA, people like George Bovell who would share their TA, people like George Moses who is in some really, really high level groups and would share feedback from those groups, people who pay a lot of money for all these analytic tools, and then they would share them freely in the group. I mean, it's really a tremendous giving environment.
Yeah, and I dig that they kind of cull the group ever so often and get people out who not really contributing.
The great purges. Yeah. But I mean, Kiwan, as we're talking about all the different technical resources that people use, you use TradingView, right? And I just want to kind of switch the conversation to kind of look at a few elements and charts from TradingView, so you could give people an idea of some of the things that you look at and how you perceive certain charts. Yeah.
Yeah.
So we'll start with this particular chart, which is the BTC USD chart. So explain what we're looking at here.
But I prefer if you scroll up and start with the quarterly chart of the total crypto.
The quarterly chart of the total crypto. All right, let me pull that one up.
The total crypto market, and we'll come to this.
All right. Let me get that one in here.
So the reason I wanted to start with the total crypto market is because you want to get like a big picture first before you get an overview of us.
You start looking more narrowly. Okay, is this the right one? Okay.
Yeah. So each candle here represents a 3-month period.
Okay.
Right. And I have a Fibonacci retracement tool drawn from the bottom of that last cycle to the top of the last cycle. And
which is here to there?
I can't see your mouse moving on it. So
sorry. What colors are we looking at? Or are we looking at the green line?
You're looking at the candlesticks.
Right.
Yeah.
But you
So
said you have a Fibonacci retracement outline.
so that's the kind of the rainbow
Right.
box that's
Okay. Okay.
underlaid on the whole chart. If you look at the bottom there, that's like the gray area. That's it's
Right.
touching the bottom of the market, where it bottomed out, and the
Right.
top of the range. This is total two. This is the wrong chart. So actually, what we're looking at here is the total crypto market minus Bitcoin.
Oh, let me see.
Oh,
Let me see if
right.
I.
Yeah. No. I didn't send you. I didn't send you the
Okay.
correct.
Okay.
But
But I
don't worry.
mean,
It's not,
let's
they more or less,
we could still get an idea of how you pinpoint things, how you look at things from this.
yeah. It's mostly, it looks almost the same, but
The values might be different.
yeah. So the total crypto cap, it reached a point of $3 trillion, and that's
Right.
Bitcoin, Ethereum, and all the other alts underneath it. And this here, it looks like it got up to like 1.5, something like that. It
Yeah.
was. This is the total crypto
Yeah,
cap minus.
this one touched me 1.75 trillion.
Right. Yeah. Good. So, and that's all. That's the whole crypto market minus Bitcoin. So what
Right.
what you could see happening here, if you look at the last candlestick, this gray one. So some people use green and red. I use black and white or black and gray, right?
Right.
And the black candlesticks, those are the down candles, and the other ones, the lighter ones, are the up candles.
Right.
And each one here represents 3 months. So we enter Q1 of 2023, and it's already retraced and kind of backfilled the body of the previous quarter, right? Now, that satisfies what do you call institutional order flow dynamics. So what that means, so the order flow right now is kind of downward pressured on lower time frames. But if you look at this time frame, the quarterly,
Right. The quarterly time frame.
yeah, we're still in an uptrend on the quarterly, right? Because we have a high in 2018,
Right.
and then we have a higher high in 2022
Right.
or 2021. It was really 2021, but yeah. So we have a higher high there, and we have a low, which is 40 billion or whatever. So for this to have a lower low from here on the quarterly chart, it needs to go all the way and take out that.
Right.
Or it needs to establish a low where it's at now, kind of pump and get, maybe make a lower high and then come down and take that low out. So on this quarterly chart, this 3-month chart, we're still in an up. And this Fibonacci tool that I have up here, this is based on, this is an exponential Fibonacci tool. So it's calibrated on a logarithmic scale. So, I'm saying a lot of these things here, and you kind of have to be, if you have your pen and paper, write it down.
Make your notes, guys, because this and I think it's important for people to see you have these conversations, hear these words that don't make any sense to them, and understand that this is not something that you can learn and perfect and become competent in a 2-hour course that somebody sells you, or a 1-day course that somebody sells you, because we have a lot of that going around, because everybody wants to trade and buy a Lambo and all these kind of things.
Yeah.
But realistically, like you said, you've been doing this since 2019.
So, and now I think I'm up to like 5,500 hours around there. I kind of lost track a little bit. The last time we spoke, I think I was around like 4,000 hours or 4,500 hours, and
Right.
I've clocked at about 1,000 to 1,500 more hours since then, at least.
At least I would say at minimum.
Yeah, and that's like market specific. I've been doing crypto work as well. I was working with a firm, um, and that was like full days, eight to 12 hour days, just so
7 days a week because crypto don't sleep.
yeah, and you know, bad practice. You have to even God rest on the 7 days. So take a day. The market's not going anywhere. And
Now,
that's a lesson I'm sticking to for sure.
for sure. Now, for some of the people who seeing these types of charts for the first time, hearing us talk about candles, one of the things that I just wanted to point out, because each candle has a little line that goes through the center of the solid candle, right? So there's a solid candle, and then there is what we call a wick, either at the top of the or the bottom of that candle.
Yeah.
Now, those wicks represent points where the market would have touched during the course of this particular period, but the solid candle, the bottom of the solid candle and the top of the solid candle would represent the opening price and the closing price of the particular period, correct?
Yeah, depending on the color of the candle.
Depending on the color of the candle.
Yeah.
And
So if it's
right.
if it's a bullish candle or a candle that went up, um, bottom of the body of the candle would be the opening price.
Right.
The wick at the bottom of the candle would be the lowest price that price action touched
Right.
during that candle period. And then the wick at the top of the candle is the highest price that occurred during the candle body during the time period.
Right.
And then the top of the body is the price that it closed at, and that's for a bullish candle. A bearish candle is the wicks are the same, but the body, the opening and closing price of the body is the opposite. So for a bullish candle, this is your opening price and this is your closing price.
Right.
And for a bearish candle, this is your opening price and this is your closing price.
Right. And people need to understand that even though your position may fall within the opening and closing prices, you can get liquidated on a wick
if you're using leverage.
If you're using leverage.
Yeah. So if you don't want to get liquidated and you
trade spot.
In crypto markets is much better, I would say, to trade spot because you don't actually need leverage. Because Solana pumped 100% plus in less than a month.
Correct.
So 100% gains in any stretch of the imagination, in any market, in any situation, that's real good. You can't. It's ridiculous, So, and you trade for that.
You know what's interesting is that, and it's interesting, it's unfortunate, it's exciting all at the same time, because until you get into crypto, 5% interest over a 1 year span is an amazing achievement, right? Especially coming from the traditional space where the banks are paying you 0.0 something percent interest, right? For me, before I got into crypto, I was getting 5% semi-annually on a credit union investment, and I thought I was killing it. You know what I mean? Because if I reinvest that, I get 10% over the course of the year.
Before crypto, I was making 0% on nothing because I was like living for the moment and just like saving money thing is boring. But I knew I had to do it, because I wanted to.
But now, when in crypto you talk about a project doing you buy into a project and it does 20% and you're like, that wasn't a great project.
You learn to appreciate those 20% pumps, and your vigilance in crypto is rewarded.
Yeah.
Being active in crypto, that's one thing, man. Like once you're active in the market, doing one thing or the other, whether it's trading. In fact, trading is actually probably the worst thing you could do in the crypto market.
100%. Listen,
Yeah.
I tell people I tried trading. I got liquidated a few times. I had some wins, but I think maybe my wins from a nominal standpoint were more than my losses, but I lost so many times. But I mean, when I started doing trading and kind of started playing around with the idea of trading, I was trading like $10 and learning to trade with $10 and that kind of thing. So at maybe max 20x leverage. So, a 20x pump, 100% pump, you might get $20. You might get, $30. If you lose it, you lose $10 kind of thing.
Right.
But
Yeah.
I don't have the patience to look at the charts on a consistent basis. I don't have the personality that allows me to look out for these different bull flags and bear flags and teacups and inverse mountain and head and shoulders. Like I just don't have the patience for it. So for me, I much prefer to learn everything about projects, do all the investigations around projects, learn about NFTs, invest from a spot perspective, and just leave the technicals and the trading to the professionals like yourself.
Yeah. I mean, and I wouldn't even consider myself like a full-fledged professional. I'm an average student of the space, and I would defer to people with more experience, and but I have what I have experienced so far. Uh, it checks out, so the methods and the strategies, and I mean, if it works, it works, right? So
Right.
yeah.
So going back to the charts briefly, I mean, which chart you want us to look at? I know you sent me like the Bitcoin dominance weekly, the Dixie weekly, the Bitcoin weekly chart, even the S&P weekly, and those are all charts that you use and you look at on a consistent basis when assessing the market, correct?
Well, assessing this market in this time,
Right.
because what I've realized too is that the market, the charts really are a print of the psychology of the market, right?
Right.
So when everyone has their eyes on something, uh, let's say like Elon Musk, everyone had their eyes on Elon Musk's Twitter. When he says something about Doge, Doge reacts. So if you have Doge uh, as a consideration for something that you would trade, you need to be looking at Elon Musk, right? So these in this downtrending market, the S&P 500 uh, is a really good marker for how much liquidity is in the market.
Right.
That affects everything, all of these risk assets. So, and crypto is no exception.
Right.
And that's what you
So
see in here.
so we're looking right now at the S&P 500,
It's a weekly chart.
the weekly
Yeah,
chart.
yeah. And what we see in here is that it's respecting this diagonal resistance
Right.
even up to this week, right? So if you look at that last candle, uh, it's backfilled,
Yeah.
right? So it's backfilled the body of the candle. Uh, is it gonna be a bearish engulfing candle where it closes and takes out the previous week? If it
Right.
does that, then that's continuation signal for this downtrend in market,
Right.
and crypto most likely will follow it.
Right. Because and this line you've drawn here is what you would call a downward trend line, right? That kind of shows how the market has been moving over the last few weeks.
Yeah, and it's being respected by price, you know. So
Right.
if it's touched it 1, 2, 3, 4, 5 times, it tried to break out on the fourth time there,
Right.
and then it just got. If you look at that candle, it just got swatted back down.
Yeah,
From there.
those are the kind of candles that make you sick.
Yeah, I'm seeing your mouse now, so
Okay. Yeah.
yeah, so
And
that's that there.
and
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 then,
and, and you know they say the trend is your friend until it changes. So you as a trader, you would say that to respect this line until there is some confirmation above it.
yeah, yeah, and I mean, you know, we could pray and hope that it goes up, as you know, I've fallen victim to it as well. But uh, you you really need to be stoic and not rely on hope, and just rely on the facts and the data that's presented to you. So, for all intents and purposes, this is, you know, this downtrend is being respected so far, predictably, because of this trend, you know. So, not too good for crypto markets right now, but let's see what happens.
And
We
what are we seeing on the Bitcoin weekly chart? Could we take a look at that one?
Yeah, I think I have it there. Right.
Right.
Yeah. So what we see in here is that, you know, where I have that Fibonacci kind of rainbow thing drawn there, and that's a bullish Fibonacci tool I have on there. So I'm looking for the retracement down to like the purple line, or to
Right.
retrace through that purple. And if this is the start of some bullish trend, then you don't expect it to go below that line.
Below
That,
this line.
that
So this
three.
is your first kind of checkpoint in terms of resistance, or in terms of forming a new point of resistance.
Yeah, and you know, we have some confirmation because the yellow that yellow line that is lining up with it there, that's the 21 exponential moving average.
Right.
Um,
This one that comes down from here.
yeah, so you know, price tends to kind of respect those things, and like if you look at the previous high, it almost touched it. So maybe on this weekly chart, it's not a great gauge, but it gets drawn into these moving averages. I think
Right.
for this particular time frame, you know, you could kind of adjust the moving average periods, and some of them kind of line up almost perfectly with what price respects. And you're like, okay, well, if price is respecting it, then it kind of, statistically, if price respects it, like it happened 1, 2, 3, and it respected it
Right.
9 out of 10 times, then you could kind of make an assumption. Okay, well, it's respecting this thing, so when it comes back to that line, it'll either be resistance or support, whatever.
Right.
And you could make a move based on that if you have confluence with some other telling factors, you know.
Now we've looked at a quarterly time frame chart. We've looked at a weekly time frame chart. Is there a particular, what causes you to choose a particular time frame over another when looking at charts?
Right. So I would either have my entire portfolio for crypto deployed into spot
Right.
Bitcoin or spot stable coins like BUSD or
Right.
USD. USDT is a little shaky, but USD. All stable coins are shaky. If I mean
Yeah.
that's just the counterparty risk of even being in this market. The only non-risky asset is actually Bitcoin.
Because it's not being moved by any or managed by any centralized institution or,
Yeah,
or system.
yeah, and this specific like counterparty risk stuff I'm talking about. This is like USDT and USDC and BUSD. Those things can disappear and like just like die
Yeah.
completely to zero in 5 seconds.
UST.
Right? USD. That's a wow story. But anyway, Bitcoin, the only risk is price action. But
Right.
but Bitcoin is in a quarterly uptrend, in a macro uptrend still. It's an exponentially growing asset class, right? So
Right.
yeah, what I look at the higher term time frames to know my general macro bias. To know, okay,
Right.
should I be all in right now or not, basically? And then once I'm in Bitcoin, then I go from there into different alts and that kind of thing, and you start deploying into riskier and riskier assets. So like right now, um, where we are here, this is
The Bitcoin daily.
this is total 2 again. Total 2 daily cap.
Yeah, total 2 daily.
Come out of this one. Let me see something else.
Let me see. Yeah, but you can continue talking in the meantime. I'll find a. I'm seeing Bitcoin dominance here.
Let me send you this. To pull up right now. Yeah, pull this up there. If you want to talk about this Bitcoin dominance for a bit.
Yeah. I mean,
Yeah.
we touching on an hour, but I mean, we have some time. Go crazy.
Well, Bitcoin dominance is just basically how dominant is Bitcoin in the total market cap
Right.
compared to every other crypto asset, right? So right now you see Bitcoin dominance is rising.
Right.
And
What can be inferred from that movement, that rising dominance?
There's a kind of matrix of decisions that you could make off of this, depending on if you're in a bear market, a bull market, and if Bitcoin dominance is rising or if it's falling. But in this particular instance here, when it's rising, Bitcoin is generally leading the market, the crypto market. When it's falling, alts would be pumping, basically as money flows from Bitcoin profits into altcoins.
Yeah.
And then when they take profits, a lot of people, crypto market participants, the kind of diehard ones, they take their alts profits and they funnel it back into Bitcoin.
Right. So it's kind of a cycle.
Yeah. So this kind of tells you where you should be, if you should be focusing on Bitcoin or if you should be focusing on alts.
Right. And usually if Bitcoin is pumping and you're seeing Bitcoin dominance being bullish, it might mean that alts might feel some pain in the short term.
Possibly, yeah. I mean, the real way to use this chart is when this value reaches a point of resistance, and then and at that point, let's say from where it is now, if it was to go up to like 46 or 48%, somewhere around it.
So around this line here.
Yeah, just in line with the previous top.
Right.
Right there. So probably going to pull back from there because this respects kind of market structure as well.
Yeah, because we would
Um,
have seen it here. We would have seen it not really getting to here. We would have seen it bounce here as well.
yeah,
So
and if it initiates a downtrend on a lower time frame, like a daily or something, from there, then you know also pump in and you could start to deploy into alts. So this kind of tells you generally where your attention should be and what kind of strategy you should be deploying. So it's like a gear shift. It's like shift. It's like you could shift the your mode of
yeah,
operation kind of thing.
right. And this is the one. This is the one you just sent me, which is
Yeah,
the this is BTC USD. This is what daily,
this is the daily chart for Bitcoin.
right?
Yeah, so this is the most useful chart for like uh, short-term price action. You
Right.
know,
So for
if you anything lower than this and you're kind of in scalping territory,
right,
where you're just making some quick decisions. And you have to be engaged. You know, this here you could wait until the end of the day. You know, like
right,
8 p.m. our time in Caribbean. 8 p.m. is when the market closes, the daily candle
right,
closes, and the next one begins, right? So it's just 8 p.m. now, and another candle has appeared. And what's it say? Right. So it's at the top of this last candle here. Let's see what it does. You know,
so so maybe that was my problem because I mean when I was trading, I mean I would usually use a 4 hour or a 1 hour candle. I've done some real degen gambling shit on a 15-minute candle kind of time frame. But you would say that this is the lowest time frame that people should be looking at if they don't want to have to be staring at their computer like this whole day.
it depends. So, it depends on how much time you can allocate to really monitoring the market. You know, but you have to devise a framework that you are sticking to with how much attention you're paying to the market.
Right.
If you can actually devote uh, 1 hour every 4 hours in a 12-hour day to the market, then you could probably look at the 15-minute, or I look at the 10-minute when I'm down there. 10-minute, I think the 10-minute follows ballistics a little better.
Right.
But when I can't, I start pulling back out and out and out and out. And on my phone, the alarms that I have alarms set for every 4 hour period in the day.
Right. Okay.
So I have an alarm for 8 o'clock in the morning, 12 p.m.,
Right.
4 p.m., 8 p.m., and some of them have different levels of notifications. Some of them have sound, some of them vibrate, some of them just kind of flash.
Right.
Ones late in the night, I don't have them with any sound or vibration and that kind of thing.
Right.
But so my day, I'll just be going along my day, and these alarms have been going off for a year and a half now or whatever. So I'm aware of the 4 hour cycles during the day all the time. And the alarm literally says 12-hour BTC close. But yeah, so the 4 hour I think is easy enough, especially if you set alarms like that, and you could kind of go back in. Your strategies, you should write down your strategies so that you could, when that time period closes, you read your strategy, come to terms with it, and you're like, okay. Then you look at the chart.
Right.
Is this following what you want it to do in favor of the trade that you want to make, or is it going against the trade that you have made or want to make,
Right.
and you need to exit or change your strategy and that kind of thing. And it requires diligence, or else you lose money, basically.
And not just diligence. I mean, I could see how it requires a certain level of humility, where you've made a trade, based on all your indicators, and then if the market goes against you in that trade, you have to be open enough and honest enough and humble enough to say, you know what, maybe there was something wrong in my assessment, and maybe pivot from there, as compared to saying, no, I was right, it's gonna bounce back, and then you get liquidated.
Yeah. So I have journal entries from 2019 that I still reference now. Every so often I'll go back into my journal and be like, who am I? And what mistakes am I prone to make?
Right.
And I get surprised by what I had written down, because I use language like not colorful, but this I use language like conversational language.
Right.
When I'm making the journal, I'll be like, I'm feeling kind of shaky, but I'm going in anyway, and like I'd write that down. I know I'm making the wrong decision, but I have to do it right now. Let's see what happens. And then the next line is true to form. It went to shit. Like, why am I like this? Fuck.
Right.
Like I have.
So
yeah.
So I mean, we have some questions here, like Dominic Hackett, who is a super dev in this space, and again, it kind of shows how one level of technical knowledge does not necessarily translate automatically to the next level of technical knowledge, because Dominic is an amazing developer, has worked across the space and across the world. You see him there in his picture with Richard Branson. And he's asking, how and where does a newbie go to begin TA?
Well, a good place to start, I think reading books is better than going on YouTube.
Right.
So you download the Candlestick Bible. I can't remember the name of that, but just use the keywords, Google.
Right.
Candlestick Bible. You start there and you learn how to view the charts and read the charts just to begin with. You download, you go to tradingview.com and you make a free account there. They have a freemium model where you have all the tools that you need, really. Right. And you just get an ad that pops up ever so often. Small price to pay for a free app that's so powerful.
Right. I actually didn't realize that TradingView had a free option.
Yeah. I use the paid option, but I need the tools. The tools are useful. The tools are useful to me.
Right.
So it's justified paying for the pro pack that I have.
After a certain level. But you would say in the initial stages, start with free, lower your cost exposure as much as possible.
Yeah, you have no business paying for TradingView if you don't know what you're doing. You get to know it first. You're wasting money if you're paying for it. Only when, yeah.
No, go ahead. Sorry.
No, that's it.
Okay, I was just saying we an hour and 8 minutes in. I think this has been an amazing episode. I see Steven saying Kiwan answered my question before I even asked it. So clearly you've been very thorough. For those listening, one of the things that Kiwan and I have been discussing is adding a technical component to the podcast, where we're going to have Kiwan come in maybe every week, every other week, and do a little segment where he kind of analyzes the market over the last couple of days. So maybe once a week for 5 to 10 minutes. And I think that's going to be super, super valuable to people, especially people who are interested. Dominic saying, I would love that. But I think that would really add some value. So I'm looking forward to us kind of figuring that out and getting that started as soon as possible. Kiwan, thank you so much for being with us today. I mean, is there anything else you want to share? Is there anybody you want to shout out before you ship out?
No, thanks for having me. I really appreciate it. Thanks for valuing my opinion enough to invite me on. And shout out to Omega and the crypto communities, Crypto Buzz and Axe Capital and all these communities that I'm a part of, Strategic Crypto, and yeah, kudos to you and what you're doing.
Thank you very much, sir. But I want to thank you for being on. I mean, your time is very valuable. I know there are a lot of people in this space who would and have paid to have you, walk them through technicals. So we appreciate it sincerely for you being with us. And shout out to the young man. I heard him calling to you a little while earlier. So I know you have to get to that.
Yeah, man.
Congratulations. I don't think we've had you on the podcast since he's been a part of your life. So congratulations for that new stage in your life, man.
Thank you.
So Kiwan, we'll talk again soon. Definitely look forward to having you as a regular guest on the podcast on a weekly basis, talking TA. Yeah.
Sure. Yeah. Cheers all.
Bless. Guys, that brings us to the end of another amazing conversation. I didn't even realize the time. This is probably one of our longest episodes and well worth it too. I want to thank Kiwan again. I want to thank Omega. I want to thank everybody who participated in the chat, Stephen, Dominic, everybody who tuned in, everybody watching at home. And I look forward to seeing you guys next week, Thursday, to share in more crypto education, information, conversation. Yeah. And as I always say, adoption is inevitable. Illuminati out. Be blessed.